What's happening, everybody? It's your boys, Sean McLaughlin and Steve Straza, fresh from a Memorial Day weekend. Straza had a very restful weekend. He exercised, he ate healthy, stayed home last night, right? All those things.
Yeah, I'll remember today. It's been a day. Sure. No heat. We're good. Happy
Hey,
Memorial Day, everybody.
happy Memorial Day. I got a nice hike in yesterday. If you saw my Twitter stream, I had some nice pictures from my hike.
You know what I need from you? I need you to remind me. I need your, daily reminder that it's a bull market. That's what.
Yeah, it certainly feels like it. We had you and I were kind of chatting over the weekend about like just crazy action that we saw in some stocks last week. And the crazy action is continuing, Straza. On my screen right now, by the way, I've got the Broadcom chart, and
Look at that candle.
today's candle is unreal
So
after
you're now the
3 days of
second
unworking.
person. You're the second person to now mention this specific candle to me, and it's not even
Yeah.
completed yet.
The stock, after running, 150 points the previous two trading days, today it opened at 830, screamed up to 920, and has now come all the way back and then some down below 810 right now. You can kind of see the intraday right here on the left side of my screen.
Yeah.
Wow. I mean, I'm not in it, but as an observer, this is something else.
Here's the problem with this one. We got earnings in a day or two, I believe,
We
for
do.
Broadcom. This thing has already ran as if it just reported a Nvidia like quarter, right? So they have to drop some hot results or really some hot guidance this week, or this thing could really come undone. They haven't
Right.
reported their quarter yet. You know what I mean? Like this is sympathy bid price action.
This is crazy. But hey, you know what? I started us on a tangent. That's
Yeah.
bad form. This is the Flow Show, and we are here to talk about unusual options activity that we are observing in the market and see if that can lead us down the path into some interesting options trades. So
Yep.
Straza, why don't you throw up the chart here? Let's see what's on your mind. See what's standing out, if anything.
Yeah, throw this table up, Izzy. Like I was just saying to you off air, this is an interesting list this week for sure, right? Let's just go in order here. Shopify, IonQ, Asana, Melco, that's a casino, Pinterest, Bumble, mobile apps. Pinterest is a website. Huya, Coupang, which is international online retail. I think
What are
Southeast
they
Asia.
called? Coupang?
Coupang, like coupon, but Coupang.
Okay.
Um, yeah, Victoria's Secret, whatever. It's very archy. This is a really archy list, right? From the Shopify, IonQ, Asana, Pins, Bumble, Huya. A lot of those are ARC names, but it's speculative tech, so that really stands out. The tape today, again, and I think you were listening on Spaces today. Like, it's too bifurcated. Something has to give very soon. Whether that's leaders catching down, I think it's starting to look more like that, or laggards catching up. I think it happens this week or next week. It's too much, and the tape has gotten so bifurcated, and by that I mean we're coming in every day since last week. Sean, tech is higher. Sometimes communications because it's being dragged higher by the tech in the communications sector, and everything else lower. It's been a week now, every day. That it's not sustainable. It can't
I'm
go on.
curious. A lot of people are saying that that's the AI effect, but is it, or is it something else?
I I think it. I think it is AI. I really do. Um, the market is not being picky in a sense that it's trying to differentiate between AI winners and losers right now. If you're even perceived to touch AI, your stock is going higher right now.
Hmm.
But anything that's not perceived to touch AI is really struggling. And also, when you think about like how wild this sympathy bid is, a lot of it has to do with simple like production efficiencies, right? Like efficiency gains. So we're talking about like cost reductions for a lot of companies rather than like top line expansion.
Gotcha.
That could be huge, especially for these tech companies that are going to utilize AI I mean, shit, oil companies can do it. A gold miner can utilize AI, right? Anybody can. So there's going to be all sorts of gains. And that's why people are talking about this like it's a really big secular thing, because it, like tech does, it should impact all industry groups.
So
But
this isn't going to be another situation where people add blockchain to their name and then their stock rips, is it? I mean, that's what it kind of smells like.
look at that. Look at the AI stock today. It's up another 20%, gapping the new highs. Yeah, pull it up. AI.
Oh yeah.
Yeah.
Well, I had
You know what, Sean? Honestly, it's funny you say that. I'm surprised I haven't seen more press releases about name changes.
it's coming. It's
Yeah,
coming.
it's coming. Totally.
Well, hey, let me. I had IonQ up here for a second because
Yeah.
I know that that's showing up on your report, and I'm happy to see that some aggressive call action happening because, not to talk my own book, but I always talk my own book. We are already positioned in IonQ. We're long in January bull call spread. We're long the 10-20 January calls. I'm liking what's happening here.
Yeah, throw up the chart. Look at this. Got a beautiful textbook reversal pattern on an absolute basis. Also on relative terms, you see that nice breakout in the lower pane. That's IonQ versus the S&P 500. There's so much to like about this. And high and tight right now. What's it up? It's up nicely today.
It's up almost $11 right now.
Yeah, so this is a little bull pennant here, 11%. Short-term continuation pattern forming right above the breakout level of this nice base. I really like that. I think you can, draw some diagonal trend lines on that bull pennant and buy the breakout, and that measures out to, I think, 1550. How far out did you go with the option?
We went to January, I believe. I don't want to give any false information. Let me just let me look it up here on
That
my
makes
side. On my side panel here, where is it?
So
IonQ.
this is
Yeah,
like a really interesting company. It's like a quantum computing company. They just signed some deal with Amazon.
yeah.
Sounds
All right,
like
so we are in the January options, and I'll put this together here. I mean, we're already in this trade, so this is not something we're creating on the fly here. But I want to show people what what a vertical spread like this looks like. We are in the uh, January 10-20 vertical call spread. So if you look at, oh, did I not do that right? Boy, it's like it's my first time with this trading platform. I don't know what I'm doing. Let me try that again. Vertical, and set this up at the 20 strike. Okay, so this is what this trade looks like, the P&L graph. Let me stretch it out. Sorry if I'm fumbling along here. So we're long the 10 strike, which is kind of at this little elbow right here. And we profit in this trade all the way up to the 20 strike, at which point our profits are capped. We paid $2 for this spread. What did we pay? Yeah, I think it was $2 or maybe a buck 80.
it was a net debit.
$1.85. We paid $1.85. Yes, it was a net debit. It's currently trading at 225. You can see. I don't know if you can see down here. It's trading at 225
Yeah,
now. So we're up in the trade.
nice.
Long way to go. But we did a vertical spread in this one, and I'll kind of recap for people who don't know what and why we did it.
Yeah,
I liked this trade. I liked being a premium buyer because at the time, if you look at the chart here, the implied volatility was higher than I like it to be when I'm buying calls, right? So I didn't want to just buy straight calls, but I did want to define my risk because when we put this trade on, it was right in here when the stock was trading. Actually, no, we had the big pop, and then when it came back,
you bought
is
it
when
on weakness that day. That red candle.
right, we bought it on this. Let me zoom in here so it's a little easier to see. On this red candle day right here, this was that Thursday? That's the day, or Wednesday. That's the day we wanted to buy on weakness, which is what we did. But I didn't want to just buy calls, A, because the implied volatility was high, and B, you've been making fun of me. You and JC have been making fun of me about this whole debt ceiling nonsense. I agree. It's total nonsense. I don't care what happens here. All I care about is that there's a potential that we could have a big move in the market, either direction. We could go way up, or we can go way down. And I don't know. So I don't want to have any, I don't want to have a whole lot of risk on the table. I don't want to have any undefined risk. And so when I was thinking about this trade, I'm like, all right, we could buy the calls, but they're too expensive. So let's reduce the cost of our participation. And there was a lot of juice. I shouldn't say a lot of juice, but there was plenty of premium in those 20 strike calls. I mean, look at them right now. If I look at them
Ah,
today, those 20 strike calls are trading for a buck 10. That's 100% gain from here in this stock. And
so
those calls are trading for, for a dollar, which is crazy on a
how
$10 stock or $11 stock.
how does this strategy make money? Like, how do we win here? Based on
So, in the most basic sense, if I put this spread on and I wanted to hold it all the way until January expiration, which I don't, and we can get into that, but let's say I did, we paid $1.85. So let's adjust this price here if it matters, but we paid $1.85. So at January expiration, as long as IonQ closes at a price of 11.85 or higher, then I
nice.
make money. And where did I get 11.85 from? 11.85 is the premium that I paid. That's $1.85 plus the long call strike, which is the $10 strike. So
So simply put, Sean, we're betting on this short-term continuation pattern that is printing just above the breakout level of a year-long base to resolve higher. That's the bet we're making.
that's the bet we're making, and the further bet we're making is that if I zoom back out on this chart, if we get up to the, or we think that if it gets to the 20 level, that's probably where it might pause.
Yeah.
Anything's possible. If this thing screams at $20 this week, I mean, who knows, man? The sky's the limit. I don't think that's going to happen. That's certainly not the bet I'm making.
No, but
But
it's nice that that's an option, right?
right,
This thing
right.
could totally scream. It could
But the
be
nice thing here, Straza, is I paid $1.85 for this spread. The most the spread could be worth is $10.
yeah,
If it goes all the way up.
yeah,
So I theoretically could make 5 times my money, right? Let's just say, just to make the numbers easy, let's say I spent $2 on this spread. It could be worth 10, so that's 5 times what I paid for it. That's a
nice.
good reward to risk. Now, I'm not holding this spread to make, to sell it at $10. The way
Yeah,
I do it when I buy vertical spreads is whenever I'm in a position where I'm up half of the maximum potential gain. So in this case, again, let's keep the numbers simple. Say I bought it at $2. The most I can make is $8, right? Because the spread could be worth 10. That's the most I could sell it for. I bought it for 2, so I can earn $8, right? Maximum.
yeah,
But
6.
if I'm in a position where I'm up $4, which is half of 8,
Yep.
I'm going to take the profit and go. And that could happen, sometime this summer. Even though these are January expiration options, this spread could be worth $6 in July or August, and I'm going to take that profit because at that point, if the spread is starting to be, worth 6 or 7 or $8, that's great. I'm sitting on a profit, but now I'm that $8 at the spread I could sell for now. I'm risking $8 to potentially make an additional 2. Now
Yep.
the risk reward is skewed against me. So that's why I like to get out of spreads when I've captured half of the maximum gain, just because the risk reward math doesn't work in my favor. Yes, statistically speaking, the odds might be in my favor. Like if I just held, I'm more likely to earn more money. But, I'd rather just take that profit, move on to the next trade, move on to the next best trade,
I
and
think
keep
that's an
recycling.
important lesson. Like, I think what you said there is really important, especially with options trading. Maybe you don't treat your equities this way, or your common stock, right? But when you have a gain with an options trade, you kind of want to treat it as if the whole thing could disappear, right? So your downside is everything at a certain point. So if you have a
Right.
nice gain, and do you agree? Like, you have to think that way more so with options than you would traditional
I
equities.
think so, because with options you're running against the clock, right? There's a ticking clock, and if you don't act, you might miss it. Whereas a stock, if a stock is consolidating and going sideways, it's not really costing you anything other than maybe opportunity cost that you could be using that capital to do something else. But if the stock sits there and goes nowhere, you're not losing money. Whereas in an options trade, depending on the trade, of course, if you're long premium each day that the stock doesn't do anything, you're losing a little bit of value every day. So yeah, you can't just options trades are tough to just sit on and hold them. Like you
You
have
have
to be mindful of what you're doing.
you have to be so much more nimble as an options trader. Right.
Absolutely.
So Sean, like, where are you out here? If this thing starts moving against us, where are you closing it down?
Our stop loss is just below 850, I believe, is the number we're
Yeah,
using. So right
860.
about here, if you can see it on my chart, 850
Yeah, the
is
breakout.
any close below that, we're out. That's a clear indication that we're either early or wrong. Either way, I don't like it. And then we might reevaluate for another entry later. But 850 is our line in the sand.
And it would happen soon. We would know pretty quickly because this pennant would be resolving lower, not higher.
Look, I hope we find out quickly that we're wrong because, and this sounds counterintuitive, but we have till January expiration with this spread, right? But if this thing turns around on us, this week, next week, or even over the next few weeks, because we have so much time until expiration, if it breaks 850, there's still going to be premium left in this spread. So we won't take a full loss. We paid a buck 85 for it. I wouldn't be surprised if this thing's trading at $8 next week or in 2 weeks. I wouldn't be surprised if we could still sell that spread for $1.25,
Yeah.
maybe $1.30. Which, hey, I mean it's a loss, but it's not that big of a loss, all things considered.
This chart looks so good right now. I'm thinking gain, not loss with this one. It's about to close a new 52-week high.
Well, you know what? I like your hunches, Straza, because I don't want to toot your horn. I hate promoting you when you have great ideas. But when we put this meta trade on, back earlier in the year, we put this trade on right around, I don't know,
Loved this.
right around here. I think early. No, I'm sorry.
A lot of people would not have put this on. They would have said it's extended. It needs time.
This is where we put it on, right here. March 3rd, I'm pretty sure is the date we put it on. And when we put this trade on, we were new in the trade. It hadn't really done anything yet. And you said on one of these calls, if I'm not correct, we have it on video. I think it was on one of these flow shows. You said this could end up being our trade of the year. And it really did work. It might not be our trade of the year, but it's certainly in the running for one of our trades of the year.
What we got home builders up there? What else is in the running?
Yeah, I think this Toll Brothers
Yeah.
or Toll Brothers or Lennar.
Yeah.
Uh, we're
These
out of Lennar now because our options expired, but we rode this Lennar from, I don't know, no, somewhere around Thanksgiving we got in and we rode this thing all the way up. Big win. That one might be our biggest of the year, but we got a lot of the year left, so we'll see.
Um, before we hop off, we've already gone 20 minutes.
Wow, time flies.
ARK is up 4 consecutive weeks. We're focusing on these ARKy stocks. These are the stocks that are forming nice bases and resolving higher from them, telling us that the path of least resistance is now higher. And I just want to mention Asana. It really stuck out this week. This one is on so many of our lists right now. A lot of insider activity in this name over the trailing 12 months. It's got a nice base, maybe not the cleanest base, but when you see these patterns, charts that look like this, just resolve higher over and over and over and over again, you don't want to get too picky. You want to find a way to get in. You define your risk, trade it responsibly. You just want to get into patterns like this one. So we're doing the pivot highs here at 23. The May 26th calls, 2150s, were what was active last week, so already expired.
Well, just mindful to anyone who's watching this, they do announce earnings on Thursday, June 1st. So this week, Asana, heads up on that. If you like this bullish setup, implied volatility is not the cheapest it's been, but I would play this with straight calls if I had to get into it today in anticipation of an earnings breakout. Buying calls, I think, is the move right here, and I would probably go. I would want to minimize the effect of an earnings bust, let's say. So I'd go a little further out in time, just in case there's an earnings bust. I'd maybe look into November options. I'd probably look for a 25 delta strike. So the 35 strike. Ooh, the 35 strike is far out. Ooh, it feels far out.
That's that's beyond our target.
Yeah, that's the 25 delta. The options market's pricing in the 35 strike in November as the 25 delta option. That feels a little lofty.
Those aren't cheap. Those are not
No.
cheap calls. I don't like that.
Yeah, I don't like that either. I take it back. I think Asana until after earnings For me, as a bullish bet, I think it's a no play until earnings shake out and maybe we can get some better options prices
I
next
like
week.
that. I agree with you. I think it's a good point. And we do that, right? We try and stay away from these things ahead of earnings. But, but I will say, if there was ever a time to maybe not be so afraid of these earnings reports, and maybe this is the top because I'm talking this way, these reactions have been great, especially if you're in the tech or the growth space. This is still early innings of a new bull market. Nobody believes it. Everybody thinks these earnings reports are terrible. We're in an earnings recession apparently, but the stocks are going up after the earnings reports more often than not.
Yep.
So I
Well,
would be
just
less afraid of buying a stock ahead of earnings today than I was for the past few
yeah.
years.
Well, just be mindful of your risk, define your risk,
Yeah.
be comfortable and be fully prepared to lose everything. But if you trade it small enough, it's okay. But you want to put yourself in a position to win.
And here's the problem with earnings when you're managing a trade. You might have a stop loss and say, hey, I'm going to be long Asana. It's at 21 today. My stop's at 20. You're not going to be able to sell it there. If they come out and bomb earnings, it's going to be at $15 and you didn't even know. You could blink an eye, it's at 15. You're not going to get filled on 20. If anything, that's a mistake to have some sort of resting order that could get filled after hours. Never do that. But that's the issue with earnings, right? They blow your stops and then they blow your plan for trading it. And then the whole risk reward equation isn't what you thought it was. And that's how things can get.
Well, you're making the case for options trading, right? With options trading, you can define
Yeah.
that risk. And so, instead of using a stop loss, you just define your risk up front. You know the most you could lose. And I mean, and I'm glad you brought that up because I get asked this all the time from people is, if I have a trade on, they're like, okay, are you leaving are you leaving a stop loss order in for your option? And the answer is no. I never leave stop loss orders for the option itself. Let's just keep it simple. Let's say I'm long a call, right? I don't leave a resting, good till cancel stop order at say $4 to sell my thing at that price. No, 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 no. There's a number of reasons why I don't do that. And I'll get into that in a second. But what I do is I base my stop based on the price action of the underlying of the stock, right? So if the stock breaks a key level, that's my signal. And then I go into the options market and put my order out there and get out. And the reason being is that particularly in options, and unless you're trading in the most liquid options markets, like say like the SPY options or Apple options, right? When markets are moving fast, bid ask spreads in options really widen out. Like you could have an option that, let's say, its theoretical value of $1, right? That's how much you think you should be able to get out for that
It can be
call
50,
option.
150 maybe.
Well, the value, the middle price of the bid ask spread might be $1, but the bid might be 25 cents and the offer $1.75. And if you are trying to get out in a hurry and you got a stop loss order in your option, you're going to get filled at 25 cents, not at $1, which is the actual value of that option. So never, ever, ever put a stop loss order in an option. You are asking to get your face ripped off. And then some smart ass will say, oh, well, we'll just put a stop limit in and I'll either get filled in my price or I won't.
You're not going to get filled.
Yes, that's true, but you're likely not going to get filled at all if the thing's going to rip through you. And yeah.
Sean, I think that's such good advice. And I'm with you when it comes to you don't like chart the option contract itself because you could do that on all these brokerage websites. There's
Yeah.
nothing there with that. You chart the underlying, you have a price that says, okay, get out. The problem with that though, and this is just something, correct me if I'm wrong, that I've accepted as an options trader, you don't know what the price of that contract's going to be, right? So it's really, really hard to measure what your risk is a lot of times because like you're saying, if you're managing it based on the underlying, you're getting out at whatever price it's trading for, right?
Yep.
So you don't know what your risk is a lot of times.
And so the best way to combat that is you do it up front. And that comes down to position sizing and defining your risk. If you define your risk at such points that, like, say, hey, if worst case scenario I lose, $300, and if $300 is totally within the realm of an acceptable loss for your trading portfolio, great. That's how you do it. Any other exit other than taking a total loss is basically gravy at that point, right? You assume you'll lose 300 if you're wrong, but if you lose 200, great, right?
And that's exactly how I mean, you know what I do. I'm often trading very, near term options, long calls, naked. And I go into every trade thinking I'm going to lose all this, most likely. And that's fine. Like that's where my mind's at. And it's great.
There you go.
I think call options along with like football and olive oil and other great things. They're one of like God's greatest inventions, call options. They're just so good.
All right. Well, ladies and gentlemen, we have just declared to you God's greatest invention here on the Flow Show. Steve Straza. I'm Sean McLaughlin. Thanks for tuning in. If you're trading Asana, be careful about earnings. We like IonQ. Do it carefully. As our friend JC would say, YOLO responsibly.
Love
Take
that.
care, everybody. We'll see you next week.
Peace.